I'm going to be talking to Nnaziri Ihejirika, who is an engineer and the managing partner for Electrify Capital. Now, he wrote an article recently for the Oxford Institute of Energy Studies called CCUS in Canada, Potential and Prospects. So welcome to the interview.
Thank you. Thanks for having me.
Why don't we start with an overview of your paper, please?
Sure, I'd be happy to. So the paper is examining sort of, I would say, it's a techno-economic study of the potential for carbon capture, utilization, and storage, CCUS, in Canada. The paper approaches this topic from the aspect of Canada as a major oil and gas producer, containing the third largest oil and gas oil reserves and the fourth largest gas reserves in the world. And at the same time, as a country that I think most people would agree has a very high degree or high sense of I would say, ESG propriety. And so how does this country sort of balance the value of oil and gas, which is its by far single largest source of export revenue, with the need to sustain that industry, but the need to also transition, reduce its emissions, and demonstrate commitment to the various social, environmental, indigenous, and political groups in the country that have been clamoring for change.
Well, you wrote an interesting sentence that I'm going to ask you about, and so I'll read it for you. Potential challenges with finance, infrastructure, regulatory support, and various stakeholders threaten to derail CCUS momentum in Canada. What did you mean by that?
So when you think about where CCUS in Canada, Canada is probably one of the, I would say, 3 or 4 countries in the world that has really advanced, I would say, the implementation. So not the design or the theory, but the actual implementation of CCUS. We have 3 world-class facilities. I know there are questions about whether Boundary Dam is truly world-class, but we do have definitely 2 world-class facilities that are producing at or above their design carbon capture rates. There's definitely a lot of industry momentum. You know, I mean, looking at those announcements that came out in the middle of last year, almost as though they were synchronized, you know, one after the other, you know, over a spate of 2 or 3 weeks. It appears as though this is a done deal. And if you talk to a lot of people, they actually assume that this is a done deal. And really, those 4 challenges, each and every single one of those challenges, I think, can actually act as a roadblock to the successful implementation of CCUS. Finance in particular, for me, in as much as these projects have been announced, the truth of the matter is none of them has actually been announced as sanctioned. So they're all announced as proposed projects. And I think if you think about, you know, the Quest facility, as well as the Alberta Carbon Trunk Line and all the feeder projects from Sturgeon and from Nutrien, there was a high degree of financial support from both the provincial and the federal government to drive those projects home. Yes, costs will continue to come down as the technology is scaled, but when you think about the fact that CCUS is not really in itself a value proposition for investors, the reality is that future projects will likely continue to require financial support from the government, whether big or small. From a regulatory standpoint, the carbon price increase, which was announced just over a year ago, will help. It certainly provides a bit of a, okay, this is a price of carbon, and at least by 2030, it'll be more expensive to pay a carbon price than to have a CCUS facility. That's for sure. What if the government changes? What if we have a different government in power that decides they don't want to have a carbon price any longer? And all of a sudden, companies have invested billions of dollars in carbon capture technology that no longer is valuable. So those are the types of challenges that I think are not quite understood that could derail the progress or the momentum of CCUS.
Now, you're plugged into the conversation at the technical level around CCUS, and I'm wondering if the stakeholders, the clients, the folks that you were talking to are also considering the risk of decarbonizing oil and gas, particularly in Alberta, and particularly with the oil sands, with the peak oil demand, you know, estimated to be arriving around 2030. And it may very well that we decarbonize a resource for which there is a declining market after 2030. What are people saying about that?
It depends on who you talk to. I think there's a lot of when I talk to people in the industry, especially on the producer side, I think there's a lot of skepticism about peak oil and whether, not so much peak oil. I think everyone recognizes that peak oil is coming, but about the timeline for peak oil. So I think most people think it's more around the 2040 mark. Obviously, with Canada banning the sale of internal combustion engine vehicles starting in 2035, I think it's somewhere in that decade. So whether it's beginning or end, I think it's coming. And that's where I think the value of CCUS potentially is, because with CCUS, you have the potential to unlock the hydrogen economy, right? And I think the earlier companies can get into the CCUS hydrogen game, if you want to call it that, then the faster they can be the early entrants, but also prove that there is value in hydrogen beyond just in the refining process, which is really where it's being used in oil and gas today. CCUS also allows you to isolate carbon streams. Right now, there's no known value for that carbon other than in enhanced oil recovery, which we know is not going to be part of the government approved. The government is not going to fund or subsidize any projects that result in EOR. But what this does potentially is create an opportunity for researchers and other developers to find other uses, other commercial uses for the CO2. And then finally, there's electricity. A lot of these companies are now pivoting into the electricity space. So what I think is, it's almost a race to we will extract as much oil and gas as possible. And in the meantime, we'll install CCUS facilities in the hope that will help drive the electrification pivot for a lot of these companies, but also identify a commercial market for hydrogen and for carbon dioxide.
What about other industries other than oil and gas? You also wrote that the future growth of CCUS is expected to be spurred by increased deployment of capture technologies in mature industries such as oil sands extraction, refining, fertilizer, and cement manufacturing. I can see the application in Alberta, particularly with the infrastructure it's already building. What about other provinces like Ontario, for instance?
So it's a great question. I still see CCUS in its raw form as being, within Canada anyway, being very Western Canada centric to a certain degree. I see the value of hydrogen, for example, being a bit more Canada-wide, especially once you get into green hydrogen, where you're you're using direct air capture, for example, rather than CCUS as your base for the electrolysis process, or potentially in a place like Ontario and Quebec, maybe using bioenergy as an example to generate your electrolysis and therefore your blue hydrogen. Potentially, I think it's called pink hydrogen, from nuclear in Ontario. So I think when you think about the hydrogen market, I can't see blue hydrogen, for example, being that source in Canada, outside of Western Canada, sorry. Within the Ontario market, I mean, you could see CCUS being deployed in, there's a large fertilizer, industry in Ontario. There's a large cement industry. I mean, with cement in particular, it almost feels like CCUS of all the different industrial applications. It almost feels as though CCUS is literally the best application for the cement industry. And that's probably where it finds its home. But is that big enough? Is that big enough for investors or for builders and developers to really spend that money building CCUS capture, CCUS facilities in cement and fertilizer plants? I'm not sure it is, right? I still think the market for CCUS is heavily going to be Saskatchewan, Alberta, British Columbia.
Well, let's talk about another point that you made in your paper that I actually was really interested in, and I'll read it. There's been a hesitancy, particularly from oil and gas firms, to invest heavily in the technology. This is due to the belief that CCUS alone is not profitable, since it doesn't add reserves or increase the netback on a barrel of oil, two key balance sheet metrics for oil and gas firms. Now, here's why I find that interesting. it's pretty clear to me that the energy transition and climate risk are existential threats to oil and gas firms. Now, I know existential threat doesn't show up on a balance sheet, but goodness, you would think that that ought to be at least be a consideration when allocating capital. So what's your take on that?
It's a great point, and you probably put that the best way I've heard from anyone who's asked me this question. The challenge, so I'll use a couple of examples. So when BP announced their energy transition plan last year, their shares fell. Same thing happened with Suncor, their shares fell. There seems to be, I think right now, a bit of a separation between what investors are telling companies they would like to see them do and what investors are rewarding companies for actually doing. And increasingly, what we're seeing is that for oil and gas companies, their values are only going up when they demonstrate that they can have increased revenues or when they find new reserves of oil and gas, not commissioning CCUS plants or green or blue hydrogen facilities. And so I think that comment, I purposely laid it in there because the reality is that CCUS is an enabler, right? CCUS is almost, to me, the way I see CCUS at this point, without a defined market for carbon that can generate profit for a company, CCUS to me is your license to operate. CCUS is your life extension tool. And I think Canadian oil and gas companies are starting to see that now, but I think up until the last couple of years, I don't think they saw it that way. I think it was, no, we're going to try and fight the narrative that Canadian oil is bad. And we're going to try and demonstrate that if people want to use oil, Canadian oil is the right oil to use. And I think now they're starting to realize that people are questioning whether we should be using oil, period, regardless of where it comes from.
That's actually, we do a lot of work in energy media around narrative, particularly oil and gas. And I would have to say that I agree with you. I think the industry they've been laggards on their perception of the energy transition, their perception of climate policy, and the structural changes that's driving globally and what that means for their product. Would you agree with that? Sounds like you would.
I would agree. I mean, we talked about that in I think the right time for the narrative that was being spawned in the late 2010s. That was probably the narrative for the late 2000s or the late 2000s, which was Canadian oil is ethical. We're cleaning up our act. We're the best place to come and invest your dollars. That was the right narrative. They didn't deliver that narrative at that time. At that time, the industry was largely quiet. And I know that as someone who is in the industry, that the industry was largely quiet for a long time during that period. And then when they started speaking, they were speaking that message. And now, again, the message really, and you're only hearing this message from a select few companies. And I think Canada is probably leading the way when it comes to that. But only a few select companies are saying there's a life expectancy on this asset. It's not necessarily about having reserves that can last for 50 years any longer, right? That's no longer that important. What's really important is what are we going to do to deliver energy in a sustainable and clean manner? What are we going to do to get young people to want to work in the energy industry? Those are the people they're now starting to ask what I would consider to be existential questions, as opposed to relying on the life and the quality of their assets.
Well, then let me finish up the conversation, Nnaziri, with this question. And that is, if we're talking now about oil and gas as a sunset industry, certainly oil. I mean, it sounds like the thinking in the Alberta oil patch is beginning to change and accept that reality. Then shouldn't that figure into how much public subsidy, how much support there is for what essentially are 50 to 75-year assets?
It absolutely should. And I think what needs to happen is companies should be measured and rewarded from a subsidy standpoint on how well these ideas, whether it's carbon capture or blue hydrogen, how well these ideas translate to the transition of the industry rather than to the life extension of the industry. I really think that's, and I'm pretty sure the economists and the policy wonks will be able to develop some sort of metric for how that can be done. But to me, those two things need to be tied together in order for in order for the industry to demonstrate that it is actually aware of the reality, and in order for the government, in turn, to show the citizens that the money, that they're not throwing bad money after bad or good money after bad, right?
Thank you very much for this. I really appreciate your insights.
No, thanks a lot, Malcolm. It's great talking to you.